All right, folks, I got 2 minutes past 5:30, so we'll get started. You just heard the record button. So as you can imagine, this meeting is going to be recorded, and the webinar tonight, after we're done, will be uploaded to YouTube. So if you want to reference back to this webinar, or if you have any questions that maybe you got answered on here and you want to share it with your friends, your family, your spouses, feel free to share tonight's webinar with all your friends, your family, your spouses. There's a lot we're going to cover in the next 60 minutes. The title tonight is Buying Real Estate and Free Money to Help You Buy a Home. We're going to cover just that, various government programs for San Diegans and Californians that will help you buy your first home. And even if you're not a first-time home buyer, there are some other programs that we'll cover tonight that can also give you free money to go out there and buy some real estate. It sounds too good to be true, but stick around for 60 minutes and we'll cover all the details of these programs. It's a new year, and with that, I know there's a lot of New Year's resolutions out there. And for some of you, it might be to buy a new home, might be to buy your first condo, whatever it may be. I hope that tonight's presentation gives you some good information to help you along your journey. So what are we going to discuss tonight? Real quick overview of who I am and my team, a little background on us. Then we'll discuss first renting versus owning and a little bit about interest rates, because I know many of you out there are currently renters and you're wondering if it's even a wise decision to rent. Well, we'll show you the difference between renting versus owning and how owning financially might cost a little bit more per month up front, but over the long term, owning real estate actually saves you millions of dollars. And you can become a multimillionaire by owning real estate in San Diego. We'll dive a little bit into that. And then we're going to go deep into some free money and down payment assistance lending options. Many of these loans are California specific, but we're also going to cover some San Diego City, San Diego County, even a Chula Vista loan to help you buy property in the county of San Diego with grants and down payment assistance. This topic is very near and dear to my heart because back when I was in my 20s, I bought my first property here in San Diego, and there was no way as a 27-year-old I would have been able to buy my first property had it not been for down payment assistance programs. So in 2008, I bought my first condo in Bonita, and thank you, federal government. I got a 5% down payment provided to me by the US government. And since then, I've gone on and bought many other properties. My wife and now own 8 properties throughout San Diego, but I never would have gotten to 8 if I first didn't start with property number 1, which I was able to buy with what we're talking about tonight, down payment assistance. We'll end tonight's presentation by going briefly over some of the basic steps to buying a home and what's going on in the San Diego real estate market today. And I'll close it with some Q&A. My name's Patrick Kappel, and I work in the real estate brokerage business. I run a brokerage team in San Diego with about 12 agents on it. But before I got into real estate brokerage, I was first just like you. I was a consumer. I was serving in the Navy. In fact, this summer marks 24 years in the US Navy for me. I did 11 years active duty, followed by time in the reserves where I currently serve. And I transitioned from the Navy after buying my first, second, third, and fourth property and realizing that real estate brokerage needs more expertise. So I created the team I have today called the Kappel Realty Group. And our team focuses on working with clients and consumers that want to buy real estate through the form of education. Every single client we work with, we educate you on the real estate market, the process of buying homes, and what you're here for tonight, some of the knowledge on how you can access free money to buy real estate in San Diego. As you see from my bio in front of me, my team has sold over 750 units in San Diego in just the last 5 years. That amounts to about $500 million in real estate sales. Why do I share that with you? To let you know that we certainly know what we're doing when it comes to buying real estate. You can see in the education there, I have a master's degree in real estate, an MBA with a focus in finance and real estate, as well as an undergraduate degree from the Naval Academy. Bunch of awards there you see on the right. At the end of the day, I want to sum up that who you work with when you buy a real estate property matters. And why do I say that? There's too many people out there with a real estate license. It's too easy to get a real estate license. And it baffles me how consumers and people out there utilize a friend or a coworker or their Aunt Judy to buy their first home, their second home, even though their friend or their coworker doesn't do real estate full time, or maybe they only do one or two deals a year. When you make the biggest financial transaction in your life, I implore you to work with a professional, someone or a team that sells millions of dollars of real estate a year, that helps countless people every year, because that's the only way to become a professional at anything is repetition, repetition, repetition. And our team certainly has that reputation. So at the end of tonight's presentation, if you're interested in buying a home and you want to work with team professionals, feel free to reach out to me. I believe I have put my email right into the chat. So we'll start out with a little bit of knowledge, because as you see in front of you, knowledge is a key to everything. It empowers you. That's why we do these presentations. So let's take a quick look at buying versus renting and just some of the basic differences between it. One, when you buy real estate, you get to keep your money. You're buying down your mortgage principal, and after 30 years of mortgage payments, you own the property. Not the case when you rent. You're building up equity for your landlord when you rent, but when you buy, you're building up equity for yourself. You get to keep the money and you get to have an asset that appreciates. And if you go on and maybe buy a second and third property, you're now accumulating assets. Retirement is something we all want to do one day, and it's statistically shown that homeowners have a much higher likelihood of being able to retire by their target age. Why is that? Because their homes are paid off and they're practically living for free, compared to renters who often have to face ever increasing costs. You have better financial credibility and thus better lending standards when you buy real estate. When you show that you can make a monthly payment, all of a sudden you're going to see your credit card interest rate, your car loan interest rates, and other financial products are going to go down and be more favorable for you. Then you get the intangible sense of ownership. You don't need permission to go out there and paint your walls or change the layout of your property. And ultimately, owning real estate leads to financial freedom. I know that firsthand, and I have seen it happen with countless clients that we work with. You reach that financial freedom sooner than you can imagine, but you certainly have pure financial freedom when you hit your golden years, because after 30 years, you own the property. And it's peace of mind knowing during those 30 years, the payment is steady. Everything's to the contrary when you rent. Those of you, almost everyone's a renter at least once in their life. And you know that rents go up every year, especially in a place like Southern California. It's a liability that never goes away. Unless you own a property, you always will need to pay someone else for your place to live. You have no ownership. You don't get to make decisions about the property. You're investing in the landlord, not yourself. And as mentioned before, it hurts your potential to retire when you don't have fixed expenses like a mortgage, and you have a liability like rent that keeps going up. And even with all the tenant protection laws in California, you can still be kicked out at any time. We mentioned already that rent often does go up. Even with rent control, rent can still go up between 5 to 10% every single year in San Diego. So what I would ask you to do, and really everyone out there, and I'm so glad I did myself in my early 20s, trade your rent for a mortgage. More and more people are doing that. So what makes up the parts of a mortgage? This is good to know, especially for those of you who have never had a mortgage, first-time buyer. The first part of a mortgage is interest. And just like when you take out a car loan, a portion of your payment is the interest payment. Another portion of your payment is a principal, paying down that loan. So the interest is money you pay to the bank for the ability to borrow the money, and the principal is paying down the balance of your loan. It's almost like money coming back at you. It's like, I like to use the analogy, a forced savings account when you have a house. The chart in front of you simply shows that mortgage breakdown over time, over a 30-year period of time. You can see that while the payment stays the same every year on this example, the balance of the mortgage, the dotted line, goes down over time until the balance is eventually $0. And you also notice that throughout time, the portion of your payment that's principal, the dark blue, increases, and the principal that's interest decreases. That's because your principal balance keeps on going down. And after 30 years, you own the home free and clear, and your principal and interest payments go away, and you're practically living for free in San Diego. So when I was in grad school, I built a very robust rent versus own financial calculator. Now you can go online and find tons of financial calculators for buying a home. I would argue there are very few, if any, online calculators you can find that are more robust, detailed, and applicable for you than the one I'm about to share. So why did I build this calculator? Because I love math, and I'm a firm believer that math is a universal language, and it does not lie. No matter where you go in this world, you're going to hear different languages, but math is the same. And while people can lie with words, you cannot tell a fib with math. The truth always comes out. So what I want to share with you is a case study example that many of you are probably in right now yourselves, where we have hypothetical property that you can rent for $3,000 a month, or you can buy it. And if you buy it and you own it, your mortgage is going to be $3,990. Now, a lot of people would stop here and they would say, well, $3,990 is a lot more money than $3,000 a month, so I'm going to rent. And that person would be making the largest financial mistake of their life. And why is that? I would not argue that 3,000 is certainly less than 3,990. But when you drill down into the math, I'm going to show you how $3,990 will make you $3 million wealthier over time. That's right, you're paying more each month, but you're going to become wealthier over time. And I'm going to show you also how that higher mortgage payment of $3,990 over time becomes around $2,000. And to the contrary, your rent for $3,000 a month over time becomes over $12,000 a month, an astronomical number. So let's look at math. I know that math is not everybody's favorite subject, but let's just take a few moments to look at the reality of what happens. What you're seeing now is an eye chart in front of you, and we're not going to look at just a screen. I'm going to zoom in on the top left portion of the screen. What I wanted to do initially, though, is take the long view look at the spreadsheet in front of you so that you can see there's a lot of math and a lot of numbers going into this calculation. The spreadsheet is more simple than you might first imagine. All the spreadsheet cells in blue in the upper left are the ones we type in variables, such as 500,000. What's the purchase price? What are your closing costs? 1%. How much of a down payment are you doing? 5%. What's the interest rate on your loan? What's your rate of appreciation? And we also put in what you would rent the property for, 3,000, and how much would rent go up each year. So everything on the right, we don't have to zoom in on, but that shows you month over month over month for 360 months, which is 30 years. How much are you paying every month as a homeowner versus how much are you paying as a renter? And that rent might be 3,000 today, but if it goes up just 5% a year, it increases quickly. So let's zoom in on the top left side of what we just looked at. When we zoom in, we see this hypothetical property, 801 West Hawthorne Street. I know that property very well because it's a condo I have owned since 2009. Today, it's worth about $500,000. I bought it for $187,000 over a decade ago. Money's doubled at least once. So that shows you one way you can build wealth. But let's say you bought it today for $500,000. Well, I know you can rent it because I still own it and I rent it to tenants. And my tenants pay around $3,000 a month. So you see down here in the bottom left, buyer's rent, $3,000. You also see how much does rent go up a year. In California, it can go up 5 to 10%, but let's say we're a nice landlord and it just goes up 5% a year, every year for 30 years. So I write in number 5 down here. Now, let's say you could buy the property for $500,000 and you get a down payment assistance program that gives you $25,000. So you get 5% down. You borrow the other 475,000 at a 6.5% interest rate, which is pretty close to where interest rates are today. Few other assumptions. Your property taxes are about 1.25% of purchase price, and they go up about 2% a year, no more than that. In fact, California law, they can't go up more than 2% a year, which is nice. Fixed expenses. You also have insurance, which is maybe $800 a year, and HOAs, which on this property could be around $400 a month. So now that we have all of our inputs, the Excel spreadsheet does the hard work, crunches all the numbers, gives us some pretty important outputs that as a renter versus homeowner, you should know. So let's look at the math of the whole situation. I've circled on the far right in red, payment year one. What is that? That is how much money you are paying every month to own the property versus renting it. And as we already mentioned in a previous slide, to own this property, you're paying a little over $3,900 a month. And to rent it, you're paying $3,000 a month. And again, this is where most people stop and they don't think any further beyond this. And that is a financial devastating decision. Because what you really got to look at, unless you don't plan on living more than the next 12 months, you need to look into the future and how your decisions today will affect you financially for years and years to come. Now, I'm assuming most of you are going to live more than the next 12 months. I am assuming most of you are going to live for decades to come. And let's hope we all do. So let's look at the math on what happens if you do live for decades on. Over the next 30 years, if you own this property, you will pay $1.597 million. And that is all of your mortgage payments, all of your tax payments, all of your insurance payments, and all of your HOA payments added up over 30 years. But if you rent the property, you're going to pay substantially more over those 30 years. You're going to pay $2.391 million, almost $2.4 million. And as we see here, that difference is $794,000. So although you pay less today to rent, because rent goes up and mortgage is fixed, over 30 years, you pay almost $800,000 more to be a renter. Next, let's go one cell over and take a look at what happens after year 30. After year 30, maybe now you're in your 50s, you're in your 60s, you're in your 70s. It depends on what age you are when you buy. After year 30, as a homeowner, all you have to pay is taxes, insurance, and HOA fee. And for this property, that adds up to about $2,000. Your mortgage is now paid off. But as a renter, you're paying over $12,000. And that seems like an astronomical amount. And that's not per year, that's per month. How does $3,000 a month become over $12,000 a month? That's the power of compounding math. You've heard it called compounding interest. But when $3,000 a month goes up just 5% a year for 30 years, you get over $12,000 a month you're now paying in rent. This is why I have always said the only people in the United States of America that can truly afford to rent are the super wealthy, because renting is the most expensive decision you can ever make. Renting. And why do so many people do it then? Because of what I said earlier, most people don't like math. And most people stop on their math calculation as soon as they see how much it costs to rent today versus how much it costs to own today. And they don't look forward 5 years, 10 years, 20 years, 30 years. Most people don't like to look into the future. The way you can be financially successful in your life is to be one of the few people that looks forward in time, 5, 10, 15, 20 years, instead of just at today. Look forward in time and let the math tell you your answers. So the last answer we get is, how much did your net worth change if you own instead of rent? The owner now has a net worth of over $3 million. And how is that? A $500,000 property appreciating at just 6% per year, which is the long-term San Diego average rate of appreciation. That $500,000 property will be worth over $3 million in 30 years. How did the net worth of the renter change? Not at all. In fact, they probably are down millions of dollars because they've been renting the whole time and they could get evicted or kicked out at any time. So looking at this spreadsheet, it tells you a lot, it shows you a lot, shares with you a lot, the math, but it also leads me to say a statement that is not easy to say in most other states or cities across America. When you buy San Diego real estate to own it, you are making the first decision to becoming a multimillionaire. Because when you buy San Diego real estate, the odds are within 30 years, if you hold that property and don't sell it, you will be a multimillionaire. And this is why I tell all my clients, 100% of the clients I work with should become multimillionaires by just owning their real estate. And it sounds crazy. Guys, I grew up in the Midwest where a home costs $100,000. They don't appreciate the way they do in Southern California. We're fortunate to live here. Some people think it's unfortunate because home prices are so high. I see it as one of the few pathways for people like you to be able to get on the financial train and build wealth and financial security. There's an article that came out not too long ago that said the typical American today is going to need a net worth of $1.8 million to be able to retire, ever. Most people will never reach a net worth of $1 million. I guarantee you that everyone who reaches a net worth of $1.8 million, most of those folks are going to be homeowners. And for most of those folks, it's going to be owning a home that gets them to that milestone to be able to retire. So I really want you to focus on the calculations we did and let math guide your decision, not emotion. We usually make bad decisions when we let emotions control us. Let the math control your decisions this year. So next, down payment grant and assistance programs. Why are we talking about this? Because I've learned firsthand working with hundreds of clients that the number one obstacle stopping people, maybe stopping you, from buying your first house is that down payment. It can be daunting. It can be tens of thousands of dollars. Maybe you haven't saved it up. Maybe you have saved it up, but it makes you nervous to spend it all now on a down payment. So the good news is, even if you saved up the money, for some of these programs, you don't have to spend your own money. Spend the government's program with government's money with these down payment programs. So these programs help you get over the hurdle that most people have. And the second challenge that people have is they don't know where to begin. And you're already overcoming that challenge by being on this webinar. This is a good start. We're about to spend the next half hour or so diving into these down payment assistance programs. And then if you want to take advantage of one of these programs, reach out to me when I'm done going over these in the next 30 minutes, and we can help you utilize some of these programs. So let's get into it. You don't need to be a first-time home buyer. And that sounds weird because a lot of folks think first-time home buyer assistance programs are only good for first-time home buyers. The truth is most of the programs define a first-time home buyer as someone who has not lived in a home that you own for the last 3 years. So even if you own other properties on the East Coast, in the Midwest, wherever, as long as you haven't lived in that property in the last 3 years, you're a first-time home buyer in the eyes of most of these programs. For some of the programs, there's no income limits, or the income limits are super high. And by high, I mean like over $220,000. So you can make 6 figures. You can make $200,000 a year and still qualify for some of these programs. You can own multiple properties and be an investor. I already mentioned that. You don't necessarily have to be a first-time home buyer. Most important thing though, guys, the lender you work with matters. Most of you that are listening right now have jobs. And you know that in your job, in every profession, from the bag boy at a grocery store to the ear, nose, and throat doctor at a hospital, in every profession, certain people specialize in certain things. And I'm telling you right now, in real estate, that is as true as it is in every other industry. In real estate, certain lenders and certain real estate agents specialize in these programs. Most lenders and most real estate agents are oblivious to these programs. They don't even know they exist, and they don't know the details of them. So if you want access to this free money, working with the right lender, working with a real estate agent or team that knows these programs is the most important decision you'll make. Because again, most lenders and realtors are just not familiar with them because they take an additional amount of research, an additional amount of studying, and some agents and lenders just don't like working with first-time home buyers. Fortunately, my team loves working with first-time home buyers. So let's take a quick look at some of these programs. In fact, in about 60 seconds, I'm going to show you over 20 of these programs through a very simple real estate agent website. This is also why it's important to work with a realtor. Realtors have access to the website you're looking at right now, California Association of Realtors. So what I've done on this website is I've typed in a sample address, 801 West Hawthorne Street. Very familiar because it's the same one I used on that spreadsheet. I put in the zip code and I put in the estimated sales price. Let's put in $500,000. And we see that there are 26 down payment assistance programs available. This is why whenever I meet a new client, I always say, look, there's over 20 down payment assistance programs. We can probably find one that's a good fit for you. And these aren't one size fit all programs. When I click on the view programs, we'll see that some of them just about anyone can use. Some of them have income limits. Some of them you need to perhaps be a person of color, or you need to be Native American background to qualify for some of them. The first one up here, though, just about anyone can qualify for. It's called the California Housing Finance Agency, CalHFA, My Home Assistance Program. And we're going to go a little bit deeper into this specific program in a couple of slides I built just for it, simply because this is a program almost all of you will qualify for. And what do you get? You get 3.5% of the purchase price covered by the state of California. You've also, as you scroll down here, you can see there's numerous other down payment programs, zero interest rate programs. Yes, zero interest. A lot of people are complaining about high interest rates. There's some programs where a portion of your purchase price, not all of it, but a portion of it, you can borrow the money at a 0% interest rate. Imagine being able to do that with some of your loan when rates today are in the 6s and 7s. We've got the Dream for All program, which is out of funds. But I personally know that these funds are going to come back in about 2 to 3 months. This program is an amazing one because you can get up to $100,000, 20% of purchase price given to you. We'll talk about that one a little bit in detail as well. As you scroll down here, though, here's one for Native Americans. We're going to go over some San Diego specific ones that aren't even amongst these 26. You've got loans that help you buy farmland, loans that help you do home improvements to build ADUs. But this is why I'm saying, folks, it's important who you know, who you work with to make sure you have access to these loans. So with that, I want to dive into a few of these specific loans that are going to apply to a large portion of you listening out there, if not all of you. And as I mentioned earlier, if you have any questions, put them in the chat, put them in the Q&A, and I will answer all questions at the end of the presentation. The first loans we're going to start out with, though, are the specific ones to San Diego. I want to start on the top here, a City of San Diego home loan, where you can get up to 22% down payment assistance. It's the low income program. It's for anyone who makes less than 80% area median income, AMI. How do you know if you fall into that category? Well, fortunately for you, I put a really handy dandy chart down here in the bottom left. And income is based on your household size. Let's say you're a single person. 80% of AMI is $77,200. If you make less than that, you probably qualify for this loan. Let's say you're a married couple, husband and wife, and you have a child. Well, now you can make 99,250, as you see in the bottom left. So this San Diego specific program is good for folks that want to buy a house in the city of San Diego, not the county. Buy a house in the city of San Diego. Your closing costs can be covered up to $10,000. You can see that you can buy a home up to $1 million. In fact, a little over 1.03 million. You do have to put down a little bit of your own money, 3%, but the city's giving you up to 22%. DTI, what is that? Debt to income ratio. This is simply what is the ratio of your total monthly debts divided by your total income. So let's do easy math. Let's say you make $10,000 a month and your debts are $2,000 a month that you must pay. Credit card, car loan, student loan. Well, 2,000 divided by 10,000 is 20%. That would give you a debt to income ratio of 20%. Now, for this loan program, it's available to people that have a debt to income ratio between 30 to 45%. Additionally, you have to have a credit score, FICO score 640 or above, and no more than $25,000 in assets. The next program on what's the loan terms? 3% interest deferred payment for 30 years, due upon sale. So this is one of those programs where the loan they give you, the money they give you, you don't have to make any payments on the loan that they give you, that 22%. And if and when you sell the property, that's when you pay it back. The grant, however, up to $10,000, fully forgiven immediately. The next program is also for the city of San Diego. Now it's for what we call moderate income folks, and this is the BIPOC program. So this is for people of color. Any ethnicity, people of color can be approved for this program. And you can make 80 to 150% of the area median income. So this has much more lenient income restrictions. As a single person, you can make over $120,000 and qualify for this free money. As a married couple, $140,000. If you have a kid, you can make $157,000 and still qualify for this program. And as you see here, you get $20,000 as a loan, interest-free, or you don't make payments, and a $20,000 grant that is 100% forgiven. The next, we're going to take a step back, not just the city, but the county of San Diego. For the county of San Diego, and this is you buy any house in the county of San Diego, up to $589,000. So for most properties, that'll be a condo. But the county of San Diego will give you up to 17% of your purchase price. You have to make less than 80% AMI, but the county of San Diego has another program, just like San Diego, where you can make 80 to 120% of AMI, which means the center column here, 120% AMI, you can make 98,000 as a single person. So as we look through these programs, you're probably starting to wonder which one's best for you. You're not going to know tonight which one's best for you, but you're probably going to get an idea of which ones are potentially available to you. And then the way you find out which one's best for you is give us a call and we'll put you through a pre-approval process to determine which one of these loans is the best fit to give you the most amount of free money. Beyond San Diego, we've also got Chula Vista loans. You see the city of Chula Vista has a low income loan for those who make less than 80% of AMI, as does El Cajon. And if you're trying to see all these at once, here it is. If you want to, I'll pause here for 10 seconds so you can pull out your cell phone, take a snapshot of all of these programs. But as you can see, there's a lot just in San Diego specific and our county, beyond the 20 plus that are state specific. Which one's best for you? That's for us to find out. Just reach out to me and we can let you know. But let's get off the San Diego ones and dive a little bit into some of the big name, very popular California loans that are available for you. Probably the most popular loan in human history, certainly the most popular loan last year, was a California Dream for All. So what is a California Dream for All loan? This loan gives buyers up to 20%, your entire down payment covered. Millions and millions of dollars were given away last year, and this year they will likely give away up to $200 million. This program will come back online around April. Now, for those of you who are thinking you want to wait for this program, I recommend that you look at the other program options and buy a home sooner than later, because around April and May is when home prices really start to go up and you have more competition that you have to deal with on buying a home. The other thing I want to highlight is that if you start the pre-approval process and you start looking at homes, when this program comes out in April, you're going to miss it. And you're already too late. You missed the boat. Why am I saying that? Because last year in 2023, the funds for this program ran out in 2.5 weeks. And the only people that got these funds for the most part were people that were already pre-approved, pre-qualified, out there looking at homes. So they were financially ready with their lender. They were emotionally ready with their real estate agent to pick the home they wanted. And all they had to do is submit an application to get the free money. We helped our clients get over $400,000 last year in down payment assistance. And over half of that money, over 200,000, we were able to get from this program for our clients. But our clients that got the money were the ones that were pre-approved and ready to buy. So if you want to access this big money that's coming out in April, definitely reach out to us in January so we can get you set up for it. But how does this Dream for Home program really work? Well, again, it's backed by Cal HAFA, and they will provide you with up to 20% of the purchase price or appraised value, which is ever lower. You do not need to technically be a first-time home buyer, again, as long as you haven't lived in a home that you own for the last 3 years. The funds can be used for both down payment or towards your closing costs, so you don't have to come out of pocket with money. We had a client last year that got about $100,000, and his closing costs were covered to buy his first home. And he did amazingly well with that. In San Diego County, your income cannot exceed $211,000. Now, that income limit was last year's rule. It's possible that in 2024, they might lower that income threshold. As of now, all we have to work off of is what it was last year, but I won't be surprised if the income threshold comes down a little bit. But again, even if you make over 200,000, we have other programs available for you. And perhaps the Dream for All will still allow high income thresholds. It's a conventional loan because 20% is being put down. So you don't have PMI, private mortgage insurance, and you also have a much lower monthly payment because you're only borrowing 80% of the purchase price, not 90 or 95. You need to have a minimum credit score of 680. If your credit score is below 680, don't worry, we can help you get your credit score up. Takes about 90 days, so you still have time to get your credit score up before this program comes out in a few months. But if your credit score is below 680, reach out to me today and we'll help you get your credit score up. There's some things that can be done within any person's profile to increase their credit score. If your income is below 80% of the AMI, which we've already gone through what AMI is, then your credit score can be 660. The next program I want to talk about, remember, the one I just went over is not out yet. It's probably going to come back in April. The program we're about to talk about now already exists. You can get this money tomorrow. It's another Cal HAFA, California Housing Finance Agency program called the My Home Assistance Program. This is probably the most popular first-time homebuyer program. Has really high income limits. You can make over $200,000. I want to say it's around $220,000, and you still qualify for this program. So even if you got money saved up to buy, you might as well use this program if you're a first-time homebuyer, as long as you make less than 220. So how does it work? As you see here, the first one, Cal HAFA government loans, is an FHA loan in which the My Home California program offers you a deferred payment junior loan of an amount up to 3.5% of the purchase price or appraised value. Then we also have the Cal HAFA conventional loan, which gives you up to 3%. You're probably going to want to go with the 3.5% because it gives you a little bit more money. What does that mean by deferred payment junior loan. What that means is CalHFA gives you that 3.5% to be your down payment on your purchase. And you pay CalHFA back someday, but not soon. You pay them the money back eventually one day when you sell the house, or if you move out of it or refinance it, typically for a second time. But the bottom line is you don't need to come up with money out of your own pocket towards down payment when you have this 3.5% coming from CalHFA. So even if you have the down payment, you don't need to use it, or perhaps you don't have your down payment. This helps all of you be able to buy housing today without having the down payment fully saved up. Now, you do have to have a decent job and decent income to qualify, but you don't need that full down payment. So who's eligible for this program? You can see some of the bulleted point guidelines below. You have to be a first-time home buyer, and again, the definition is the same. You have not lived in a house you own for 3 years. You have to occupy the residence as your primary residence. You can't buy it as an investment. You got to move into it. You also have to complete an educational course. It's a super easy educational course. You knock it out in one day. It's online, and you get a certificate. Once you got that certificate, you can get this free money. There are income limits, as I mentioned before, but they're well above $200,000 in San Diego. What are the property requirements? You see on the bottom, you can buy a single family home, a 1-unit residence, which could be a condo, a townhome, even some ADUs can be eligible. Manufactured housing is eligible, although I don't recommend manufactured housing usually. You should buy a house or a condo, but just about anything that you can imagine living in as your principal residence is eligible. What about interest rates? Interest rates on these loans are competitive. CalHFA is not the lender giving you the money. You work with a normal lender that specializes in CalHFA financed loans. And that's why I'm saying, if you go to 100 lenders out there, 70, 80, 90% of them probably don't specialize in these programs. Very few do. In fact, on the CalHFA website, they've got a short list of lenders that are approved to do these CalHFA loans. And my team interviewed a bunch of these lenders, narrowed it down to the best ones, and that's who we usually recommend our clients to work with. So if you're interested in it, let us know. We'll connect you with a lender that does CalHFA loans. I already mentioned the homebuyer education requirement. Again, super easy, one-time course online, and then you do a one-on-one 60-minute interview with a homebuyer educator just to make sure you know what you're doing. Again, it's all about education. Here's an example of how that program would work. Let's say you buy your first home for $600,000. You buy it with 3.5% down payment. You would get around $20,000 towards your purchase price. Free money just given to you. As I mentioned earlier, California is known now and then to have ADU funding. This is also that type of funding that can dry up, and usually every year it comes back out with some fresh grant money. So maybe you already own a home, or maybe you're looking to buy a home with a big backyard so you can build an ADU. If so, reach out to us because we can help get you connected as well to ADU financing options, some of them giving you free money. And we can also connect you with ADU builders and contractors, again, folks that specialize in it. Always work with specialists, not generalists. Now in San Diego, it's a big military town. As you know, I'm a 24-year military vet myself. So you can't talk about home loans and down payment assistance without talking about the VA home loan. Some of you listening to this webinar might be vets yourself. Maybe you're married to a veteran, or maybe you got a family member or a child who's a veteran. The VA home loan is one of the best benefits United States veterans get. How does it work? I've used my VA loan multiple times, and yes, you can use a VA loan multiple times. It's available to military veteran buyers. Now, maybe you didn't serve in the military, but you married someone who served in the military. You both have it now, and you can use it together to buy your home. This is one of the only loans in the United States where you truly put down zero. You put down no down payment. You don't need a grant. It's 0% down. The Veterans Administration backs that loan. VA loan also has slightly lower credit requirements. Interest rates are usually lower on VA loans, so that's the way to go, certainly if you're a military veteran. And it's good not just if you were active duty, it's also eligible for some folks that served in the reserves, some folk that served in the National Guard. There's certain stipulations if you were in the reserves or the National Guard, so reach out to see if you qualify for those. But the other big benefit of the VA loan is you have no private mortgage insurance. Usually when you buy a house with 20%, less than 20% down, the bank is going to charge you a little bit of an additional fee every month to cover the cost of insurance for your loan. That is called private mortgage insurance, and we can talk about that a different time. That's a whole subject in itself. But just know that with the VA loan, you don't have PMI. So we have covered the number one hurdle to buying a home, the down payment. And I have showed you options. Pretty much all of you listening, if you make less than $220,000 a year, there's probably free money you can access to buy a house, and we can help you get that covered, the down payment. So that's the biggest hurdle. The second biggest hurdle I often find with home buyers, especially first-time home buyers in their 20s, 30s, 40s, maybe haven't bought a home before, is where do you begin? What does the home buying process look like? So in the last 10 or so minutes, let me give you kind of a Cliff Notes version of what the home buying process looks like. You first connect with someone you trust, someone who's a professional full-time. I've beaten that dead horse, I think, but work with a real estate agent and lender that are full-time, not part-time, that do this as a profession, not as a hobby. Don't work with someone because they're your friend or your aunt, but because they know what they're doing. Once you connect with a trusted real estate agent and lender, they'll usually spend about 60 minutes with you to go through the home buying process in depth and learn more about you. Then you'll get pre-approved with a lender through either a bank or a mortgage broker. And if you're doing down payment assistance, you want to make sure it's a lender that specializes in these programs. Then once we find out how much you're qualified for, we go out and we do the fun stuff. We start hunting for a house and shopping for homes that fit what you're looking for. I also always say your first home is often not your dream home, but it's a dream come true to buy your first home. The way to buy your first home is the path to buying your dream home. In fact, your first home, you got to kind of look at it as a stepping stone to build equity so that one day you can sell that and use the proceeds and the appreciation to buy your dream home. In fact, I didn't buy my dream home till I was about 5 or 6 homes into my life. And it took me about 5 to 6 homes of buying to keep building equity, building equity, building equity to buy that dream home. So the sooner you start, if you're in your 20s, buy in your 20s. If you're in your 30s, buy now. But don't wait. The sooner you buy, the higher the odds are that one day you'll have your dream home. We go out there and we look at homes, we find one that you love, we submit an offer, the offer gets accepted, we go through an escrow process, which is a 60-minute webinar in itself, and you move into your new home. But what does that process look like on a handy dandy flow chart? Again, the first step is that one-on-one meeting. And during the one-on-one meeting, we talk about all these other things for 60 minutes so that you know what escrow is, you know what earnest money deposit is, you know what an inspection looks like, you know what contingencies are, and what's a loan contingency versus an appraisal contingency. All these things we teach you during that initial one-on-one meeting. Then we create a search. When you work with our brokerage Compass, you see more off-market properties than you could ever find online through Zillow and other sources. Compass, the brokerage we work with, is the largest brokerage in San Diego based on sales volume. And because we sell the most amount of real estate at Compass, we inherently have the most amount of off-market properties based on volume for you to look at. And when we set the search, you'll see both the on-market on Zillow and the off-market properties. Once we find that property, we analyze it, we do the home inspections from roof to foundation and everything in between to make sure it's a good and safe home for you and your family. Now, again, all that stuff that I just breezed through in 3 minutes, that deserves a 60-minute conversation. So if you want to learn more about that, reach out. But we have 5 more minutes, 8 more minutes to cover a few more things. that might be on your mind. First, top 3 myths to buying a home. Number 1, a lot of folks think, well, I got Zillow, I don't need a real estate agent, or I could just work with my coworker who's a real estate agent. The truth is, if you're not working with a realtor that does this full time, I can guarantee you, you are missing out on opportunities. You're missing out on homes that could be off market. You're missing out on programs like down payment assistance programs, and you're missing out on expertise that could keep you from tripping over a tripwire. Because trust me, when you're buying a $500,000 on up product like real estate in California, it's complex. And you don't want to do it alone. And you don't want to do it with someone who's not doing this day in, day out, 24/7. The next myth is it's cheaper to rent than buy. I hope I dispelled that myth with the Excel spreadsheet we went over a half hour ago to show you that renting is the most expensive mistake you can make in your lifetime. And if you want to sit down one-on-one to go through that spreadsheet for your situation, I'd be happy to. Next, there's a better time to buy. Guys, people always been saying since the beginning of mankind, there's a better time to buy. I'm telling you right now, the best time to buy is yesterday. The second best time to buy is today. The longer you wait to buy, the more it's going to cost you in additional rent that you're paying to your landlord. Home prices keep on appreciating. The time to buy is always sooner than later. In fact, one of my mentors when I was in my 20s said, Patrick, buy as early as possible and as often as possible. I was 26 years old and I took his advice. And by the time I turned 40, I owned 8 properties in San Diego. And I moved here with no more than $1,000 to my name back in 2007. So buy early, buy often. So what's the forecast for real estate? As you see in front of you, 2024 all the way through 2026, the majority of analysts are expecting real estate values to continue appreciating more and more, in fact, as time goes on. And here in San Diego, as you know, we have a lack of supply. And the price of everything, Econ 101, comes to supply and demand, and we just don't have enough supply in San Diego County. That's why prices will continue to remain strong and go up. You can see there's not much inventory, not just in San Diego County, but in the nation. We were in our last year, 2023, we had some of the lowest inventory of housing ever in the United States of America. Unfortunately, that lack of housing inventory is intersecting with something that's only compounding this, and that is population. You see, the people that buy a first home are usually in their early 30s, and the millennial generation, followed by Gen Z, which is even bigger, are in their 30s today. So you have the biggest generation in American history intersecting with the lowest amount of supply. So what's that going to do to prices? It's going to ensure that when you buy real estate, your investment is a safe, solid, sound choice, because prices, based on the data we're looking at today, are not going down. If anything, they're going to continue their climb upward. In fact, a recent article just came out in which San Diego was called out as one of the top 5 best real estate markets for 2024. Analysts have looked at real estate markets, East Coast to West Coast, and everything in between, and they selected the top 5 real estate markets for 2024. San Diego coming in at number 4. It's expected that this year, 11% more homes will sell than last year, and home prices in San Diego will appreciate by at least 5.4%, if not more. Again, making your investment in San Diego a very safe investment. I'm going to get to the Q&A. I see we got a few questions, but I want to end it on a couple of last thoughts, and then I'll go to Q&A. First of all, in order to cross the finish line, you must first cross the starting line. And what do I mean by that? I ran track when I was in high school, and I always got nervous. I always wanted to cross a finish line, but what made me nervous was a starting line. Because when you step up to the starting line, you don't know what's going to happen. You don't know what lies ahead of you, and you get the butterflies in your stomach. And I'm telling you, in sports, certainly in track, and also in life, if you ever want to make it across the finish line, whatever that finish line is in your mind, you got to have the guts to first step up to the starting line. So what does the starting line look like when it comes to buying real estate? It looks like this. Working with a professional real estate team of professional real estate agents. What you see in front of you is our team. As you can see, it's a rather large team. We have individuals within our team that are experts in just about every category. And I can guarantee you there's someone amongst the group you see in front of you that is a good fit to help you buy your first home. And after that, your second, your third, and your dream home. But as I mentioned before, who you work with matters. And I'll close it on that along with another invitation. I invite you to go on YouTube, type in what you see in front of you, Kappel Realty Group. If you go on YouTube and you type in Kappel Realty Group, you're going to see numerous other educational real estate webinars, including things like House Hacking 101, how to live for free in San Diego, investing in 2 to 4 unit properties. I even included just a couple of weeks ago a forecast for the 2024 housing market. So if you're looking to buy real estate in 2024, I definitely recommend you check out this YouTube channel. Just type in Kappel Realty Group. You'll see all the videos, subscribe to it. You'll see when we upload it. And in fact, tonight's webinar will be uploaded to this YouTube channel within the next day or two. But certainly watch the 2024 forecast that I put up there. And with that, I'd like to also invite you to our next webinar that I'll do live on January 22nd. And that webinar is going to also be the forecast for the rest of the year. It's always good to do those forecasts when we're in January. It's a longer webinar, it's 90 minutes because there's a lot to cover with real estate for 2024. I hope you can register and make it to that one. And if for any reason you can't, don't worry, I'll upload that to the YouTube channel as well. As I mentioned earlier, if you have any questions beyond the Q&A I'm about to answer now, feel free to reach out to me. You can see my email in the top right, patrick.kappel@compass.com, easiest way to get a hold of me. Reach out to me with any questions you have, or if you're interested in buying or selling real estate this year, again, reach out to me, and myself and a member of my team will be more than happy to meet with you in the near future. With that, I'm going to take a look at some questions. The first question is a woman here, it looks like, asking, saying, I'm a Native American Indian and a Hispanic, and I wonder what is available to me. Rent is going up so high, I feel I'm getting pushed out of my native state of California where my tribe resides. Karen, that's a great point. And that's why, as I mentioned earlier, there is a specific, in fact, there's a specific program for people of color, which you would certainly qualify, it sounds like. And there's also another program for Native Americans. So if you're a Native American California resident, there's special funds set aside for you for first-time home buyer. So certainly reach out to me, and I am going to get you connected as quickly as possible to a lender I know that specializes in those programs to see if we can get you some down payment assistance. And as Karen said in her question to me, I think you guys can't see these, but I can see them. Rent in San Diego is going up at insane levels. The only way to guarantee you can live in San Diego for the rest of your life is to own real estate and have a fixed housing payment. If you don't own real estate, I am pretty sure you'll eventually get to the point where you just can't afford it because California rents are going up so fast. But the secret is not rent control or all these other laws. The secret is to help everyone own their house. And that's why California has these programs. And my goal in life, my mission in life is to help as many people as possible own their house so you don't have to worry about rent going up or getting evicted. Life is better when you own it. Michael is asking, second question, are there any negative parts of the loan assistance programs? My parents always say, don't trust assistance program loans, but never really say why. I'll tell you what, I'm a pretty educated person and very educated in real estate, and the positives outweigh the negatives because there are no negatives. I can see why some parents might say don't trust things. Even though you don't know me, I'm saying trust me when I say this, they're great programs. I used one myself when I bought a property. My sister used one when she bought a property. One of my good friends who's a member on my team used a down payment assistance program last year. I wouldn't be using them myself when I bought my first. I wouldn't have my good friends using these programs if they weren't good. One of my team members, her sister used a down payment assistance program last year. So our family uses these programs that qualify for them. And my family trusts me and I trust them. So the misconception that there's some downsides to them. Let me cover the misconception. Some of these programs, as I showed you, yeah, they give you 3.5% down. They give you 20% down. And I already said, you got to pay the money back. But you don't have to pay the money back until you sell the house, you move out of the house, or you refinance the house. And by that point in life, number one, you probably have enough money that you've saved up that you can pay it back. Number two, if you sell the house and you pay it back anyway, because you just sold the house. Number three, your monthly mortgage payment was 3.5% or 20% lower every month, every year, for years and years, because the government gave you that down payment. The other misconception I see is the Dream for All program is what we call a shared equity appreciation program. And some people get confused by it, so let me try to explain it. Shared equity appreciation. Let's say I'm the government. My name's Patrick, but let's say I'm California. I'm the government. And I go to you and let's say your name is Michael. And I say, hey, Michael, go buy $1 million house. You don't have to put any skin in the game. You don't have to put any money down. In fact, I'll buy it for you. I will put down 20%. I will give you $200,000 to buy that $1 million house. And you're like, well, that sounds great. And I say, just one thing. You don't have to pay me any interest payments. You don't have to pay me back right away. But if you ever sell the house, pay me back my $200,000. Plus, since I'm putting down 20%, give me 20% of the appreciation. And now you scratch your head and you're like, huh, let me do the math. Is that still a fair deal? It is. And let me tell you why. Here's the math. Let's say you buy it for $1 million. You don't put any skin in the game. I give you $200,000. I give you 20% down. You live in it for 15 to 20 years. It's appreciated from $1 million to $2 million it's worth now. And I say, look, just give me back the $200,000 I gave you because you're selling it for $2 million. And it appreciated $1 million. Even though I put down 100% of the down payment, I'm only going to ask you for 20% of the appreciation. So the $1 million of appreciation, Michael, you can keep 80%, $800,000. Just give me 20%, $200,000. And why does the state want that shared appreciation? Because that money helps to further the program for future buyers like yourself. But at the end of the day, I don't know if any of you work in investment real estate. Probably not, but if you do, if any investor came up to me or any intelligent human being and said, I'll give you 100% of the down payment to go buy a house and you can limit it, and you get to keep 80% of the appreciation, just give that investor 20% of the appreciation, that's the best deal you're ever going to find on earth. In fact, again, one of my good friends who works in investment real estate used that program last year. So parents, trust me too. I have parents, guys. I am a parent. I have a 20-year-old daughter, believe it or not. And I can tell you as a parent, some people aren't going to like me to say this, but it's true. A parent's biological thought process is not to encourage their children to succeed at their wildest dreams. A parent's biological thought process is to protect their children from every danger. Thus, as parents, we often overcorrect towards protecting our children rather than promoting them to go out there and chase their wildest dreams. And that's why everyone's like, become a doctor, a lawyer, even if you don't want to. So I don't know if that answered your question, Michael. Hopefully it did. Lewis is asking, are there programs with 0% interest rate to pay down an existing mortgage debt, similar to debt consolidation? There are debt consolidation programs, none that I know with a 0% interest rate, but it doesn't mean they don't exist. If you're interested in debt consolidation or doing something to help increase your credit score, increase your monthly payments, reach out to me. Why do I say that? Because I have personal connections with multiple lenders, and it's the lenders I know that do the magic with the financing. I'm a real estate agent, as is my team. We do the magic with helping you find the right house and connecting you with the right lenders. But Luis or anyone else, shoot me an email and I will connect you with lenders that if there's debt consolidation out there to help you, they'll probably know about it. An anonymous person is asking, are VA loans higher in interest rates? No. VA loans usually have lower interest rates than conventional. Not always. Interest rates change day to day, minute to minute. But usually a VA loan is going to have a slightly lower interest rate than most other programs. Another anonymous person is saying, having a truck payment at 7%. Do you suggest paying the truck off ASAP or buying a house ASAP? I suggest, good question. And this is an answer for all of you. If you have a car payment, if you have a credit card payment, if you have a student loan payment, before you do anything drastic, like paying that whole thing off, talk to a lender. Talk to a mortgage home lender. Why is that? Because maybe you got $30,000 in the bank and you got a $20,000 car loan. And you think, well, before I go buy a house, I'm going to pay off that car loan. And I'm going to take my 30,000 and 20,000, I'm going to pay off that car loan. And you're going to be left with no car loan, but only 10,000 in the bank. And then you go get pre-approved for a loan and a lender says, hey, sorry, but you could have qualified for this loan if you would have kept your car loan, because that was only $400 a month and it didn't affect your debt to income ratio that much. But now your reserve requirement, and reserves are just having a few months of living expenses. Your reserves just got depleted because you paid off the car loan and you shouldn't have. And now I can't qualify you for a loan. So whoever it is with the truck payment and anyone else out there with loans and payments, never, ever, ever make any drastic financial decision in preparation for buying a house until you first talk to a lender. And then after you talk with a lender, the lender is going to say, look, you look great. You're qualified. Even with your car loan, you're good to go. Or the lender is going to say, look, you got a lot of cash saved up. You got this car loan. Use some of it to pay off your loan, but not all of it. Or let's consolidate some debt. Or don't pay off the car loan. The lender is going to look at your full financial picture and they'll give you the best advice on what you should do to qualify for a home loan. So hopefully that answers your question. I would say if having a truck payment at 7%, as you say, do I suggest paying off the truck ASAP or buying a house ASAP? I would talk to a lender ASAP. And then after talking with the lender, you'll know what path to take. Bottom line though, is buy real estate, buy real estate, buy real estate. And you're thinking I'm saying that because I work in real estate sales, right? I don't just work in it. I live what I say. I practice what I preach. And I started buying real estate, as I mentioned, when I was 27 years old. And I bought a property about every 2 years of my life. I bought a new property and I did it in the Navy, and my wife is a nurse. And if me in the Navy and my wife is a nurse can do it, then so can you. With that, it concludes our questions for tonight, concludes tonight's presentation. I'm glad you could all make it. And as I mentioned earlier, feel free to shoot me an email, patrick.kappel@compass.com. And I'm happy to get you connected and started on the path to accessing some of this free money so you can buy your first home. Thank you for reaching out to me, and I look forward to working with you in the future. Have a good night.